This is the legendary investor and trader WD Gann in the 20th century. He has proven his theory in his actual trading in about 20 years. In his book, Truths of the Stock Tape, a study of the stock and commodity markets with charts and rules for successful investor, this book was written in 1923. On page 122, in this section called When Stocks Make New Highs or Lows. When a stock advances or declines into new territory or to prices which it has not reached for months or years, it shows that the force of driving power is working in that direction. So this is my highlight. And also read here. Therefore, it is very important to watch old levels of stocks and emphasize here. The longer the time that elapses between the breaking into new territory, the greater the move you can expect. Because, and here is the key, the accumulative energy over a long period naturally will produce a larger movement than if it only accumulated during a short period of time. And we will see this example in the Australian share market index, that is the ASX SP 200. So here is the Standard Poor's ASX 200 index with a monthly intervals so that we can see a larger trend. And in this case, it's very important to see this longer historical view because the previous high was actually in 2007 November, and today is Saturday, 17th of August 2024. So as you can see here, we are still not really much higher than the previous 2007 peak, and that is after already 17 years. During this time, as you can see, in 2020, before the COVID, we we reached that peak, but we then went back off because this line became the strong resistance. Fortunately, after the strong bounce back from the COVID sell-off, the market was able to rebound and eventually there was a breakout here. And shortly after, as you can see, it sort of bounced back near the peak for several times, indicating that this is still a very strong resistance line. In this case, also can act as a support. But the central message is that it has since stabilized near this support line slash resistance line, and then now it's starting to take off, but hasn't really advanced much yet. And again, this is a 17 years view. So if we follow WD Gann's principle that he just said, over a very long period of time to accumulate energy, then the next breakout would indicate a very strong uptrend for extended amount of time. That's why I put a comment here, breakout after 15 years, expect extended growth, because the breakout actually sort of expected from here. It retraced a bit, but since then, I believe the breakout has now been firmed and it is actually rising up. So this is like a third reason that we can believe that over the longer term, the Australian share market is quite healthy. And as we shared in the first episode, you can see that it is still making higher lows, and the bottom of the previous cycles had all been supported by the upper band and lower band of the EMA 50 and 200 lines. So all these are positive signs supporting a longer term uptrend. In this case, the recent sell-off that we shared about a few days ago should not be a major concern. It should just be a temporary correction, and then the eventual rise will come which might already be happening, and it will go up even higher as we said before. So thanks for watching. Bye.